G'day folks, welcome back to another update. We're doing a deeper dive into the German stock market today, and that's where Germany is, right smack bang in the middle of Europe. So let's go to a quick overview. So again, we're going to do a SWOT analysis. SWOT, for those that aren't aware, it's strength, weaknesses, opportunities and threats for the German DAX. So basically, the SWOT at a very high level for the strengths for the DAX is large industrial and export-oriented blue chips for autos, chemicals and industrials, and strong bank recoveries in 2025. The weaknesses, heavy exposure to cyclical exports and autos, sensitivity to China's slowdown and global trade disruptions. For opportunities, energy transition, renewables and industrial tech, defense spending boost, selective bank consolidation. And threats, the Russia-Ukraine conflict spillovers, EU sanctions, energy reconfiguration, global rate volatility, and US-China tensions. In terms of the blue chip sector snapshot for the German DAX, banks and industrials that come up on top with the near-term outlook, followed by chemicals, tech, automotive, and energy less so. In terms of the geopolitical events, Russia-Ukraine war, increased defense industrial order book, creates energy supply risk and regulatory shifts. EU sanctions and energy reconfiguration, pressure on traditional energy firms, benefits for alternatives and industrial tech, and China's slowdown and trade frictions weakens auto exports and cyclical manufacturing demand. For US-EU policy and rates, rate moves and transatlantic policy shape bank margins and investor flows. In terms of tactical takeaways, overweight, select banks improving margins, industrial, defense, automation, chemicals with niche exposure. Underweight, cautious, legacy auto OEMs with weak EV transition clarity, traditional energy exposure until policy clarity, and monitor DAX composition shifts with EU sanctions and energy announcements for rapid reweighting. Technical, use ETFs or sector-specific plays, prefer strong balance sheets and diversified exports. In terms of year-to-date performance, the German DAX compared to its peers is sitting around about year-to-date of 8% growth. Followed by, but also the S&P, the Euro, FTSE and the Nikkei, with the Nikkei showing a year-to-date performance of 14%. We'll cover the Nikkei very likely in tomorrow's video. And in this week's Patreon review, we covered these regions, and you can see there Germany, we showed up a total of 14 shares showing bullish momentum, and all of them being industrial. And you can see there the other regions, and in particular the US with 50 stocks coming up in a scan, with those specific sectors showing up there as well. And if you want to get a deeper dive into some of those blue chip shares, don't forget to support the Patreon page where we look at weekly bullish shares, as I just mentioned. So let's get stuck into the chart. So for the German DAX, we look at the weekly first off. Now you can see here the price is well above the moving average. It's broken above that moving average band, although notice the CCI is below the moving average band. So that's a bearish momentum on the CCI, and it's actually hit this resistance on the weekly at 24,640. It's actually hit it a few times and it's coming back to that resistance again. Now this could possibly go higher, and as I said, the price chart is actually bullish, although the CCI chart is showing bearish momentum, so we might see a bit of a retrace to the downside. I have drawn a target range there, a Fibonacci range, and that Fibonacci range goes from that high, we take it from that resistance, we take it back to that significant, actually might have been this one here. Yeah, that was that low there. That was significant low. Now, that was quite a significant break to the downside. That's why I've taken it to that level. Normally, I would wait for it to break with the moving average band also constricting like it did there. But in this case, it's a 23-38% range, target range I've highlighted, and we expect it to break to that range possibly. There's a 90% chance it hits that, although it's actually came close and looks like it may potentially go higher. It's hard to say at this point, but we'll keep that target range in there for the time being. That's the weekly chart. On the daily, again, you can see that's consolidation period, but again, the CCI has been dropping. It finally broke higher on both the CCI and the price. So bullish momentum on the two charts, on the DAX, on the daily, and you could probably take long trades based on that little break above on the CCI and the price movement if you're trading on the intraday. On the intraday, we look at the 1 hour chart, and working backwards, we look for any divergence, and you can see there very clearly we've got a bearish divergence. We take it to that point there on the CCI, lower highs on the CCI versus higher highs on the price. Now if we draw a Fibonacci range on that, let's see if it's hit the Again, you can see there, it's come close to that. In fact, it's hit the 23% range, just touched it. It looks like it may bounce off that possibly. And that's all we need for that divergence to hit. I don't trade these divergences, by the way. I use them as a potential exit if I'm going long. If I'm seeing a divergence, I take my trades off the table and take profits. So that's how I use these divergences. So if you're seeing a divergence and you're in the money, take your money off the table is my suggestion. I don't trade them because you don't know how far it's going to fall. It could actually go a lot deeper, or it could just touch them and bounce off that initial divergence. Now, in terms of a back test, what I've done here, I've gone from back around about April 2025, when both the price and the CCI broke above the moving average band with that arrow there. That's indicated here on the 1 hour chart. You can see there, while that price was moving to the upside, we had a few nice little trades and averaging down. We averaged down with each of those periods, and as we go, we look out for any. You can see there, I'm zooming out a bit. I'm just zooming a moment there. You take note of any divergence, and as soon as you see a divergence, get ready to exit the trades. And then you start going long again when the CCI and the price are in a bullish momentum. Again, looking out for any divergence. You can see there's another little divergence there. Lower highs on the CCI. It's a bit hard to read there, but that was a divergence. You wait for the moving average band to bend down like it did there, and you would have got out of that trade there. Then started going long again. And again, you would have got out of that trade and avoided that little drawdown and so on. Until more recently, you would have avoided this drawdown, massive decline in the CCI, and you would have got out there, might have got in there with a couple of little trades and then got out again there and avoided that drawdown. And you would have, had you stayed in that trade with the average down, you would have depleted your trading account. So that's how you use the divergence on the 1 hour chart, but also paying attention to the price movements and the CCI movements on the daily as well. So what I've done now is, you would have got out of that trade when the price and the CCI started bending down, so you would have avoided that drawdown. And what I've done now is I've readjusted the back test to start from that point when the daily was starting to curve up, and that was also showing you there on the 1 hour chart. Again, going long as the CCI and the price were in an uptrend, again paying attention to any divergence and closing it out whenever you started seeing a downtrend on both the CCI and the price. And again, getting out on that one there, avoiding that drawdown. You would have got out early with that little decline there on the price and the CCI, and so on, and avoiding the downtrends and trading only the uptrends on the hourly. Again, paying attention to the daily trend as well. And lastly, as again, zooming into where we are at the moment, again, paying attention to the bearish divergence on the 1 hour chart. You've got higher highs on the price versus lower highs on the CCI, and especially waiting for that to break below the moving average range. And had you had any positions open there, you would have closed out your positions there. In this case, the back test didn't have any positions open, so we were good. So that's how you trade with the CCI and the moving averages. So if you enjoy the content, subscribe at least on a free trial to the Patreon page, where I publish weekly bullish shares shared across regions of the world's markets. Thanks, and talk to you in our next video.